All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for August 6th, 2021. It's Friday night, so this is the weekly report review. Tomorrow at 6, we will have the Q&A session for foundations, and at 8 o'clock, the swing trade portfolio review. And then Sunday at 8, will be the day trade framing review. 8:30 tomorrow morning, the usual coaching group will get together to go over our stuff in the usual way. Okay? So let's get started. So today felt like a second green day, a second up day. That feels like we're making progress here. The train slowly leaving the station. You'll notice that it is, it made a new 10-day high today, and an all-time high and an all-time high close right here. So it took out the hump of the dragon and the hump of the RL10, I should say. So this is really a good sign. And even though the RL10 has, the RL10 has become, in the fall, you'll notice that it just turned into the fall. The fact that this is moving up is good. This is actually like a supported fall crossing. I want you to notice that the RL10 didn't even get through the dragon on this one. It came down and held support at the spine. So that's the RL10 meeting the SMA 10, because the middle of the dragon is a simple moving average 10. And it resumed, crossed back over the baby dragon today to the upside. And like we talked about yesterday, that really is giving us like a kata 2. So here's the swing low in the RL10. Here's the swing low in the RL10 on this little pullback. And so you get a higher low. And when price crosses the dragon, leaves the dragon, there's your kata 2 entry right in here with that upward 3-period whole moving average. And that's pointing straight up and going, and the RL30 is long and strong, and the PSAR is strong, and we're leaving the Bollinger Band mean behind. That's good. Anytime you see the PSAR pulling away from the Bollinger Band mean, that's a good sign. So like here, they were equal, and now it's starting to get a little bit further away from the Bollinger Band mean each time. So that is sort of like a range expansion or a trend expansion. That's a very good thing. I still like the, I'd say the 2-bar low here for an exit. I don't mind. That's really the belly of the RL10. I wouldn't be offended if you wanted to just, on Monday, raise that to there and say that if this is really going to work, then this thing should just keep on going. It should be following this trend line. It should stay above the RL30 and keep going. So that's all good. All good in the markets right now. Okay, let's look at the sectors. It wore me out at soccer practice today. So the S&P was slightly positive today at 0.17. The Dow, so that's the conservative large caps, outperformed, and the Russell small caps outperformed. So the two other broad indexes outperformed at 0.42 and 0.6. The more narrowly focused tech underperformed at minus 0.44, emerging markets minus 0.84, and treasuries broke down minus 1.67. That feels like a shifting of assets from treasuries to the equities, is what that feels like. And when you add in that the VIX was the lowest performer today at minus 2.58, that sort of makes the argument for the upside going forward. Just saying. We'll see. But that's what it feels like. All right, let's look at the things that outperformed. So we have, oops. Agriculture up 0.6. Brazil, Simon Property Group, energy, lithium between 0.7 and 0.9. That's all good. Oil exploration 1.1. Materials and finance 1.4 and 2. I like when I see that. When I see energy, finance, and materials leading the way and the market goes up while tech underperformed, that's a sign of rotation to the broader market, and that's a very good sign. There's blockchain 2.8. Ethereum 3.8. Bitcoin 6.8. The big winners, the blended large cap crypto 12. Robinhood rebounded from yesterday's 26% sell to regain 8%. So there's some volatility for you. Virgin Galactic 5.8. Alcoa, Cliff, U.S. Steel, and TX. That's all our metals. That's all our steel and aluminum, the metals, crushing it. You know, pushed by the strength in materials. So when materials is good and steel is better, that tells you something about steel. There's Devon Energy 1.4, Coinbase 1%, John Deere 0.7. So a pretty broad array of multi-sector strength other than tech. That feels really good. All right, to the downside. Consumer staples, tech minus 0.08, wood 0.38, clean energy 0.4, moonshots 0.45. The other lumber, for the first time in a long while, cut underperforms wood. Not by much, but still. Consumer discretionary 0.68, Mexico 0.7, blended commodities 0.8, oil and the FANGs 1.1. S&P Bio, ARC Genomic, or I'm sorry, ARC Innovation 2%, ARC Genomics 2.2, Wheaton Precious Metals 2.4, and the VIX 2.6. Underperformers, Squarespace and Tesla minus a couple percent. Tesla breaking underneath the key price of 700s, a little tense. But it's had a pretty nice run, so that's not too painful. Apple minus 0.6. Boy, they just can't stand success. I'll tell you what. Thinking differently at Apple, meaning that they're going to penetrate the privacy on your machine for your own good. I don't like that. Not a big fan of them helping me out that much. PayPal minus 0.4, Microsoft flat. So my takeaway from this is a very broad-based strength going into the weekend that they were willing to hold over the weekend with a discounting in the VIX for price for portfolio insurance. That feels like a strong case for the upside. When it closed at an all-time high on a Friday, you got to like that. If you don't like that, then you're just not going to like anything, I'm thinking. That's what I'm thinking. Hey, I wanted to share one with you. We're going to look at the trades the boys offered. So here's a really nice trade that uses core and turbo. So here is Ichi Wally. That's he had been participating in BSY and had identified the PSAR flip on the daily. And he was prepared for the upside. And the trade that he took intraday today was just this little blip. Just looks like a little blip on the radar. But what he had internalized was the COTA 2 entry, train leaving the station, with a nice stop here. And during this big run-up, almost to Z3, he took that moment to just lock in the gains at Z2, and then it sharply sold off, and he just automatically took a 0.45 position sizing capture. And this is what he said about it. He said that was his trade of the week, just like a drill. Before I could even think, my body had moved to lock in that profit on the Z3 excursion, and then it hit before I even thought, and I had half of a position sizing R. Observing my actions in the third person, I was thrilled. That is what I get for internalizing the 2R battle drill. Truer words were never spoken. That's the way you do it. Just so pleased. I can't tell you how important that is. Well done. You just can't do it better than that. That's everything. Musashi talks about that with swordsmanship. When you and the sword are one, the sword swings itself. When you are fluid. When you stop and try to think and control it is when everything stops. So the creation of a state of no mind. There's a hyphen in there. No mind. The zero state means that there's no mind actively mucking things up. Do that in the planning and preparing and assessing. That's when your mind should be working. It should be resting during the execution and just flowing. Just so good. Luke with a scratch and a 1, 2, 3, 4, 5 exit that scratches. Grrr. But a really nice reversal here on the PSAR flip and crossing the VWAP. I think you could also just put that stop down here at the belly of the dragon as well as the PSAR flip, but I'm happy with that. Nice hold all the way through. There was a potential second position here. I'm glad you didn't take it. If you're going to let it come back this far, Luke, I mean, the 1, 2, 3 exit is here, but if you're going to give it this much for the PSAR, then don't take that second one. If you were to take that second entry at the Z3 pinch, you can't let that go negative. But you could afford to give it a little more room because you only had the one position in, so I don't mind that. That's a good sniper if you had taken it that at the PSAR flip. But the RLXD, a little later than I like. But still 1.1, that's good. A reasonable effort on the COTA 2. Better sniper. And then if you're going to take this one, again, 1, 2, 3, 4, 5, it just get something. Get 0.2. Oh, you said that, yeah. Especially because the bounce off the VWAP to the Bollinger Band mean, yes, is the most unsurprising move of all is the reversion to the mean. off a well-known support level in an uptrend. I like it when you say it so I don't even have to remember what to say, but that was good. He's not in the room right now, but he'll hear this later. Just teasing him. Here's EWZ on 500 ticks. A scratch, I'd like to get 0.2 on that. That's a good scratch, or a fractional loss. I want to get short there on the PSAR break instead of here. Then this won't be a scratch, and you should be getting paid on this. This went all the way to Z3, and the 1, 2, 3 exit is here. So get paid. But I love this reentry. You could get a second position here. I don't mind it here on the Z3 pinch breakout. If you're going to let it run all the way to Z3, take it here instead of here. That's a good shot. So we should get more than 3.1 out of that. And we should get a little taste out of this. ARC Innovation. Chi-Wing. Or no, this is not Chi-Wing. This is Jamie. Yeah. So this is Jamie on the ARC Innovation. So the first one is a 1R win on a collapsing dragon. Nice. No, I'm sorry. Yeah, this is 1R. And then long and captures 1. Pretty good timing. I like this at the Bollinger Band mean break. And good capture. I'm looking for that re-entry here. And I'm wondering what that... Maybe this sold off and started to recover and you wanted to capture 1. That's okay. I'd like to see the re-entry immediately here, although this is still good. But that would have been a 2R plus a second position, and that would have been a 3R instead of 1. This is a great collapsing dragon. Wonderful exit. This should be the stop and reverse right here. Or not later than crossing the Bollinger Band. That's late. And you end up scratching. But that's good. Good. And scratch is good. That's fine. Re-entry for a fraction and gaining 1. So that's pretty good stuff right there. You know, that's 1, 2, 3, 4, 5. So somewhere around 6 or 7 on the captures. That's pretty good stuff right there. And then a couple more in the afternoon. Good scratch and a fractional and a fractional. That's good attention to detail. Well done. All right, on to the weekend report. Boy. All right, so bullish normal, overbought all the way across the board. The percent stretch is starting to get better. It's yellow bullish now. The risk Z is still cautionary, but it is improving. And now we're having a low and a higher low like we looked at yesterday. That's all good. Theoretical exposure remains at 50%. In the blended monthly rebalancing, we're holding In ETF 13, real estate, tech, and the S&P. And then in 22 and 32, 2 scoops of tech and real estate, and that feels all right. ETF 2 is cautious at 50% exposed. In the daily market health check, we've already looked at that. The not much change on the weekly, monthly, and the intermediate. So this is just long and strong, and don't overthink it. To me, your stop has to be either at the 10-day low, which is really the Bollinger Band mean. There's no reason to have it lower than that if you're a day or swing trader. Core position, I would be tightened up to a 5%. And a 5% brings it back over here to about 422. That's 5%. Don't give back more than 5% on those long-term gains. I could even make the argument for 2.5%, if I'm being honest. I think this is a time to harvest the crops and put them away when you have them. Don't keep rolling the dice. ETF 13 portfolio, just a quick check. You can see the leaders up in here, real estate, the tech, and large caps all looking pretty good. Starting to see some recovery in Australia, and that's in the metals and commodities. Financial sectors reversing and making a nice run this week. ETF 32, it's all tech, real estate, finance, and large caps. That's just the tail of the tape right there. That's what's happening. Treasury started the week pretty well, but the weakness of the last couple days has given it some pause. This might be the time to be either locking in the gains you've made on the long Treasury swing trade that we've had, or stalking a rebound entry now that it's pulled back a little bit. You want to start getting some treasuries. This might be the time to start stalking it for the reversal. And then I'd wait to see a day in which the broad markets were starting to peak and sell off, and then the treasuries had bottomed and start to reverse. So I might be getting some cash ready to do that. Dow 30, Nike, and Goldman Sachs. We've been blowing our horn on Nike for a while and still crushing it. Goldman Sachs is leading the way in finance. That's where your strength is. And then there's JP Morgan doing not bad, not as good as Goldman, but still pretty good. And American Express is in third position. That should tell you. Sector spiders. Capital markets is finance, semiconductors is tech. That had a pretty good week. And there's your financial services. Looking good. And notice that the banks and regional banks, which have been horrible, have turned in a pretty good 1 month and 1 week move. That's a reversal of fortunes now. Finance is back. In the U.S., it's the large caps in the market health check. Let me let that come up on your screen. Yep, large caps in the market health check. Tech has been very good. Financials are starting to recover now. That's all good. On the blended monthly rebalancing worksheet here, this ETF table, notice that there's only a few longer term wins. That's your REITs and the real estate and oil. But otherwise, that's green and green, right? So when we look at the green and green, we just say, yeah, all right, that's this. It was great. It still is great. Reinforce the trend as it goes up. Just keep managing that trend. The winners keep winning. That's not surprising. But now notice the great number of green and whites, right? These are the ones that were good but are now great. So this is a chance to start exploiting new strength in the new leaders. Things like semiconductors, IT, S&P growth, financials, S&P 100 growth, or the Russell 1000 growth, I should say. Vanguard growth. Seeing a trend there? Yep. Yes, you are. Going to shift to the daily real quick. So with a new 10-day high, no channeling overreactions. And once again, if you go back and look at the last two cycles of channeling signals and overreaction signals, they crushed it. The timing could not have been better. That's why that system is a system and it's robust. I pay attention to those signals when they hit. Interestingly, only emerging markets is below its 200-day moving average. 10-day min pains, JP Morgan, Microsoft, Goldman, Travelers. Interesting. DIA, Microsoft are in there. A ton of dojis today in the Dow 30. And a really strong move in Goldman. A 5-day down in Verizon. Worthy of notice. Honeywell 3-1. And McDonald's 6.3-1. Getting ready to pop. All right, ETF 30s. Just like the Dow, a ton of dojis. A couple breakouts in blockchain, the DIA, the S&P. That's a very good sign. And led by finance, that's a tell. The large caps and finance. DIA and XLF are the components that are dragging this thing higher. In the auto framer, a few more to choose from going into the weekend. Might be worth your while just to frame every one of them and take a look at the chart and see what appeals to you. McDonald's appeals to me at 6.3-1. Honeywell and Treasuries and Latin America all appeal to me. I'll just throw Brazil in there too because that's part of Latin America. The daily squeezes, quite a few today on the basis of the tight little doji. And once again, S&P is the top squeeze. That is a market that is fully satiated and ready to pop on Monday. Let's be ready for that. Multi-time frame NDX. The top three on the 10-day NDX. Travelers, Morgan, and Sachs. That's what it is. Then in the S&P, or the ETF 30, I should say, the Dow, the S&P, blockchain, and finance. Clear as a bell. All right, that's everything we got. We shall see the coaching group tomorrow morning for our typical deep dive into important issues of performance and psychology and swing trades. And then Betty's been doing a great job keeping us posted on opportunities in the crypto space. She's just knocking it out of the park with it. I credit her with the swing trade I've just completed in Ethereum and the Ethereum Trust from 17 to 27 in about 2 weeks. I mean, that's a 60% gain. Thank you, Betty. And that's everything I got for us. We shall see you tomorrow at 6 p.m. for the Foundations Q&A and at 8 for the swing trade portfolio review. Until then, keep your risk measured and your powder dry. Thank you.